So today we'll be looking at consolidation of the group. So now group is one of the major topics which will be tested. It's one which requires a deep understanding. So kindly make sure you have a good connectivity, and also make sure you follow until the end. It'll only take 1 hour, 30 minutes. So, but for group, it will not be end by today. Group require like 2 or 3 classes, but I'll make sure within 2 classes it will be done. So kindly make sure you attend this one from the beginning up to the end. And actually the introduction is very important. And then also for the next class, make sure you don't miss. So group must be tested. It's one of the major examinable area. So I'm hoping you have your past papers. So I want us to go direct to our discussion for today. So I'm hoping you are ready. So make sure also you have your calculator, the past paper and the calculator. Those are the requirements. Then I'll be asking random questions. So kindly be posting your answer. From where I am, I can be able to see all your answers, what you are posting. So kindly, if I ask a question, kindly, you don't have to speak. And in case you have a question, just type it. Or unless it's a burning question, that's when you raise your hand. So those are the guidance. For those who are the first timers, there we have an option. You can raise your hand. Then we'll unmute you. And then you can be able to ask the question directly. Also, for those who are doing the revision at home, kindly you can also get the revision partners from Somea Kenya. Somea Kenya has one of the best revision partners. So kindly you can get them, which have all the sittings from 2015, September 2015 up to date, including the December 2019. So now let's start. Group or consolidation. So when you say we have group or consolidation, this is why you have a group of companies, not just one company. This is why you have more than one company. In this case, we have one company which acquires another company to gain what you call the control. Now, in that perspective, that's what you call the group. That's what we're looking at, the group perspective. Also look at how do we consolidate the financial statement, when do we consolidate, when do we not consolidate. So because in this case, when one company controls another one, or one company acquires another company, more than half, that means more than 50%. So now that company being acquired is known as the subsidiary. A subsidiary. And then the company which has acquired it, it's known as the parent or the holding company. Now that's what entails the group. So when one company acquires another one, more than 50%, that's what we call the subsidiary. Then also one company can also acquire another company between 20% to 50%. So now, anything between 20 to 50%, that one is not a subsidiary. Now that one is known as either an associate, or when it's 50%, it's known as the joint control or joint control. They have the joint control or joint venture. So you have to differentiate between the two. Now for it to be a subsidiary, it must be more than 50%. So if one company acquires another company 50%, that one is not a subsidiary. It must be 50 plus 1. So anything between 20 to 50%, it's an associate or the joint venture. Anything below 20, that's just a normal investment. So that's what will be entailing our group. So now let's go to the whiteboard so that I can explain more. So we're looking at consolidation. Consolidation of the group. So, and how does the group work? We have said that group happens that whenever we have company A, company A acquires another company, let's call it company B, between or more than 50%, it's more, greater than 50%. Now let's assume company A acquires company B 80%. Now, how do we call this B? Now, this is what we call a subsidiary. It's called a subsidiary. And this company is known as the holding or the parent company. A has acquired B 80%. Now, this B becomes a subsidiary. Now, a subsidiary, since we have more than half of the shares, that means for the subsidiary, we can have what we call control. We can control them. Also, company A can acquire another company, let's call it company C, between 20% to 50%. Now, for example, let's assume it's 40%. Company A acquired C 40%. Now, in this case, this is what we call an associate. And when it's 50%, it's known as a joint venture. But now for the joint venture, we have some condition which has to be met for it to be a joint venture. Now, for the joint venture, there must be an agreement to have what we call joint control. Now, another difference between a subsidiary and an associate is that for the associate, we cannot control them. Subsidiary, you are controlling them since you have more than half of the shares. Now, for the associate, you cannot control them, but you have what we call significant influence. That means subsidiary, you can control them. But for associate, you cannot control them, but you can have what we call significance influence. What do we mean by the significance influence? Significance influence, that means you can participate in their financial matters, operating matter, and whenever they are sitting on the board, you have your representation. But if for the control, that means you can become, it's like a dictator. You can be able to dictate to them. But this one, you cannot dictate to them. You have just have significance influence. So now that's the difference between a subsidiary and an associate. Then another thing you need to know, when company A acquires company B 80%, this 80%, there is another proportion of 20% in B which has not been acquired by A. How do we call that? Now, this 20 is what we call NCI, or what we call the non-controlling interest. This is what we call the non-controlling interest. And for non-controlling interest, it's also known as the minority shareholders or minority interest. So if one company acquires the other one 80%, the other proportion not acquired, the 20%, it's known as the non-controlling interest. Now that's all about the group perspective. That's the introduction. So now let's look at something else. Still under that, you need to know about the group. And one, after you have been able to differentiate between the subsidiary and an associate, what else are you supposed to know? So hoping we are there now. So consolidation of the business combination refers to bringing together of separate entities into one reporting entity. In that case, this result, the result of all business combination into one entity or the acquired obtain controls over one or more other entities, acquires control. If you control more than one company, that's what we call a subsidiary. Then business combination brings about parent-subsidiary relationship. So in group, we'll be looking at the parent and the subsidiary. Then we have said that what's a subsidiary? A subsidiary is an entity controlled more than half or more than 50% of its equity in equity shares. So a subsidiary is an entity that is controlled by another entity for more than 50% of its equity capital. I repeat again. Now, in case company acquired company B 50%, that one is not a subsidiary. Subsidiary must be greater than 50%. Then we have what we call control. Now, control is the power to govern the financial and operating policy decision of the investee. Then we'll have what we call consolidated financial statement. Then group. Group comprises both the subsidiary, the parent, and the associate. Then we have what we call the NCI, or the non-controlling interest. We have said that the non-controlling interest is the proportion of the net asset in the subsidiary that is not owned by the parent company. And how do we measure, or how do we value the NCI? So IFRS 3 allows two alternative methods of determining NCI. Number one, NCI at the proportionate share, like that one, 20% of the fair value of the subsidiary net asset. Or number two, NCI also at fair value. Fair value is the market value. So that's the two alternatives you can use to determine the NCI. Either at the proportionate share in the net subsidiary net asset, or number two, at fair value. Now let's go to what we call the group structure. And a group structure, we have three structures. Number one, we are looking at the group structures. Number one, we have what we call horizontal structure. Now, for the horizontal structure is where we have company A acquires more than one subsidiary. has B, has C, has D. Like this one is we're controlling 80%, we are controlling 60%, we are controlling 75%. Now that's what you call a horizontal structure, where all the children, they have the same parent, or one company controlled more than one subsidiary. Then number 2, we have what we call vertical structure. Vertical structure. Now vertical structure happens when we have company A. Company A acquires another control in company B. Let's assume 90%, where company A controls B 90%. Then company B, now the subsidiary, this is subsidiary. The subsidiary acquires another company, let's call it C, like 80%. Now this is what we call subsidiary. So this is the parent, subsidiary, and subsidiary. So in this case, A controls B directly 90%. That means the non-controlling interest in B is 10%. 90% is the control, the non-controlling interest is the remaining part, which is 10%. Now, company B controls company C. But in this, we'll come to see later that A is the one which will prepare the group account. How does A, being the major parent, control C? How does A control C? Now, company A controls company C indirectly through company B. So in this case, company A controls C. This is how it controls. You take 90% of 80%, which is 72%. That's how A controls C through B. 90% of the 80%. That means the non-controlling interest will be 28%. Then number 3, that was the second, the number 2 structure. We have what we call mixed structure. Now for the mixed structure happens when, we have company A, company A acquires another company B. Let's assume like 70%. So that means this is the parent, this is a subsidiary. Then company A decides to acquire another company. Let's call it company C, like 30%. Company A controls B 70%, also has another company, it's controlling another company at 30%. Then this subsidiary decides to buy share in this parent associate. And now let's assume acquires like, let's assume 35%. I hope now you're getting the structure. Huyu ni mzazi, the subsidiary. Then the parent acquires another share, anapata kamtoto kengine. Then now in this case, the subsidiary, the mtoto, decides to acquire some share in the other child. So how does A control C? Now, remember B is a subsidiary to A. B is a subsidiary to A. But is C a subsidiary or an associate to A? Is B a subsidiary or an associate to A? Kindly post your answers there. Kindly post there. Is it a subsidiary or is it an associate? C. Is C an associate to A or is C a subsidiary to B? If it's an associate, just write A. If it's a subsidiary, just write S. Can see, Give me your answers. I can see there. Can see associate. I can see someone ameandika S there. Subsidiary A. So now let's come back here. So I think it's only 2. Anode, subsidiary. So it's only one who have gotten correct. So now let's get it. Now this is how we get it. How does A control C? We need to know, is it a subsidiary, is it an associate? A controls C directly 30%. That means A controls C directly 30%. Also, A controls C indirectly through B because B is a subsidiary. So also controls directly. So how do you get that? It's 70% of 35%. 70% of 35%. So it's 70% times 35%. And in that case, how much do you get? 0.7, 35, and it will get 24.5. So that means the total will be 54.5%. So have that changed your decision now? So that means C is also a subsidiary to A. So it can be a subsidiary, it can be an associate. This I will get. It controls directly 30% and then indirectly through B 70% of the 35%. Good. So that was the group structure. We have those three structures.